So without further ado, because I know we only have about a half hour, we should jump into the sort of the evolution that's been going on with regards to bank fintech partnerships, regulation. We heard Senator Matsuvinos talk about the many changes going on both in the digital asset space as well as traditional financial services. So I think it would be helpful just to get a sense of, with regards to bank fintech partnerships and the supervision of that, what's changed and how are state and federal regulators really thinking about these partnerships and through the supervision process? So Bill, you want to kick us off?
Sure, I'll be glad to, and thanks for having me. And first, I have to give my standard Fed disclaimer. The opinions are mine. They're not necessarily the Federal Reserve Bank of Philadelphia's nor the Federal Reserve System's opinions. But I do think, look, as regulators, we are learning as we go. Now, every day I'm paid to be a skeptic. That is my job. And I'm paid to see storm clouds on the horizons. But I do think as we've learned more and as we've actually partnered with banks and had continuing dialogues with fintechs, there are advantages to the environment we're in. There are advantages they're changing. And I think, first of all, you saw the fintechs a lot in lending. And I think that those lending apps have really helped to reach people who didn't have access to those lending. And we haven't been through a crisis yet, so we'll see what actually happens on the asset quality side, but there are positives. On the payment side, I think there are clearly really good use cases for this, cross-border payments. I'm not so sure that my mom needs 24 access every week to a stable coin or a payment, but I think we are seeing the landscape evolve, and I think we are ready to spend time. I always tell the bankers in the fintechs, if you have an idea, please come talk to us early, not when you're halfway down the path or 3/4 of the way down the path. It's important to have that early engagement. I think we do raise valuable concerns. I think we raise concerns that are real and know your customer, fraud. What are you really giving? And the first question I ask bankers, if you want to envision, what's your customer want? What's the need you're meeting? So I think we are in that environment. We're clearly seeing things. And I would also agree that clearly the way we mitigate risk and the way we understand what's flowing through the bank is going to be much different. AI is going to provide an awful lot of information, but all of these come with risk and rewards. And unfortunately, I'm paid to focus on the risk side.
That is a very fulsome answer. And I think it touches on a lot of, what we talk about with our members of, you don't want to get out in front of your regulator. And one of those specific regulators being Delaware Bank Commission. So Lisa, what's your take on, from the state side, of how you're seeing things evolve and things change? I know Senator Massavino set us up really nicely earlier with your office is leaning in. So talk a little bit more about that.
Yes, thank you. And thank you, Senator, for the great introduction. You made my job a little bit easier. So thank you for that. And thank you for being here today. And I agree 100% with what Bill just said. We have to look at the risk side. That is our job. That's what we're paid for. And opening up those communications early is very important. Bringing it to our attention, what an institution is interested in doing, what products they're interested in introducing. We need to be prepared for that. We need to educate our staff. We need to know how to scope an exam or tailor the exam to that particular product or institution. So communication, I think, is very, very important and key in an aspect of between the institution and the regulatory agency, whether it be the state or a federal agency. For the state of Delaware specifically, the senator spoke about Senate Bill 16 that was just introduced and passed through the Senate Banking Committee earlier this week on Wednesday. And that bill is going to allow the state to broaden its application process, if you will, for banks and trust companies. We have a lot of work to do. We're excited about that. The bill also allows us to engage outside counsel, experts, if you will, in whether it be consultants, legal, technology, in the areas that we need to help create the regulations that will support this statute that's been introduced and hopefully passed in the next few weeks. But the outside counsel will also help us, create the application process and the guidelines that will be introduced, as well as the exam process, and help us. One of the other things is to train our examiners. I think it's very important that we get our examiners trained and our other staff within our office that reviews the applications. They need to know what they're looking at and what is, what should be approved through the state government. So we have a lot on our plate right now,
Definitely.
but we're excited about it.
Well, I think also there's, keying in kind of on that examination piece. I know we focus a lot on that of how are examiners engaging, what kind of tools do they need, what, and really just kind of abstracting a little bit. I mean, thinking of that changing examination structure, ideas that need to be shared, like what are each of you seeing as sort of the opportunities within the examination space for some changes or some shifts, and or also some of the challenges that may be there with regards to examining bank fintech partnerships?
So examiners like certainty, and this is a rather uncertain environment for them to be in. So I think what we're trying to educate them first on is just, what are the technologies? How do the technologies work? What is blockchain? What does that actually mean in terms of how payments, how people interact with that, and what actually moves it? So that kind of, not the technical, right? But what actually happens when you're doing that? What happens when somebody comes? What happens when the Zelle payment is made? Where are the trigger points? Where are the risk points? So they like that level of certainty. We're actually operating in an uncertain environment, so we need to kind of train them. But I also think we need to train them to be much more listening around what is the bank telling you, and particularly, is the bank able to articulate a risk management strategy that you're comfortable with? And that doesn't mean that it has to be everything to everybody. I think we need to pay much more attention to what the bank's business model is, who they're banking, how well they know their customers, and how well they're doing this. I mean, this is an area where, particularly with BSA and AML, there are a lot of places. It really comes down to people's judgments. And I think if the institution can explain the philosophy around the judgments they're using, the way they're using their judgments, and then also how the technology actually helps people make more informed judgments, that gives them a level of certainty about what they're seeing. At its basic, this is a risk management problem for us. And how do we actually mitigate that risk? And you'll see that when we go with the Genius Act with capital levels and those kind of things. That kind of legislation that states and the federal government are putting forward is very helpful to us to kind of understand the rules of the road. So I think we're getting there. But, there are most of the people who know this well are engaged in it. They're not bank supervisors. So I've got to make some of that transfer of knowledge.
That makes a lot of sense. And I think it touches on, Elisa, what you were saying about having kind of the right people in the room, building, the ecosystem. I know we've been trying to do that, a lot with having not only, banks in our membership, fintechs in our membership, but also regtechs in our membership, and really kind of everybody around the table. And so just thinking from the state perspective, how do you see some of the opportunities and challenges for, kind of building up the examiner and changing the examination to make sure it's the most effective and efficient?
That's a great question, because we are challenged right now with our staffing. We that is one thing we are focused on in building up our staff, making sure we have the right people in place, the right training and opportunities for them. But I think the key aspect is communication. I know I said that earlier, but communication is key in any good relationship.
100%.
So I mean, it doesn't stop with this particular aspect as well. So keeping that communication open, not necessarily just reaching out to me and the others within the office, but sit down with the examiners, the ones that are actually in the field doing the work. They're the ones that need to have that connection as well. And when an exam is being conducted, I'm just going to put a little plug out there. An exam is only scheduled for a short period of time. And our examiner's time is precious, if you will, because we have quite a few institutions and a variety of institutions that we regulate in the state of Delaware. So my ask is that when we do schedule an exam, please be available. Make the management team the right people in the specific areas that we're reviewing. Make sure that those individuals are available and have the opportunity to speak with our examiners, so that we don't leave any questions unanswered at that time. So again, I think communication, collaboration is very important.
Yeah, absolutely. And I think in addition to that collaboration, the communication, you want to have that, of course, like I come from originally, GAO, the professional skepticism, it makes sense, you want to engage, but it's a unique kind of relationship that you have with examiners and examined entities. And so, that's important to recognize, but also I want to touch on the staffing part that you mentioned, Lisa, that's something that I think hits across for both the regulated entities as well as the regulators. And so thinking about some of the tools, we've heard of, regulatory agencies that have been putting together dashboards, different supervisory technology tools. I'm wondering if you can discuss sort of how sort of opportunities in that space can be, can come to fruition. And if there's any sort of challenges that kind of, whether they be structural or otherwise, that limit the usage of like supervisory technology or regulatory technology tools within the examination process.
Sure. With something like that, at this particular time, our office, we don't have a particular tool in place that we're using. Are we searching? Are we investigating for such a tool or tools, plural? Yes, we are. But again, with the changes in the Modernization Act that was just implemented, it allows us to reach out to the right people to have those conversations, to help build those tools, get us what we need for our examination staff. We also rely on our federal partners, counterparts, to see what they're using. Maybe it's something that we can integrate and piggyback off of them. As of right now, I can honestly say that we don't have a tool that we're using, but we are working on that.
Well, and I think you're in the best place for it, right? You've
right.
got the university here that's very well qualified. You've got folks like Cafe that are, an accelerator program in Delaware that are really trying to build up, those tools and those capabilities. And so, and the federal side too. So it'd be interesting, Bill, if you could touch on some of the sort of opportunities that you see or challenges with using supervisory technology tools.
So right now, we're largely focused in how we use AI in the supervisory process, and we're very, very cautious here because we do not want confidential supervisory information exposed outside the Federal Reserve. So we're spending a lot of time in its infancy talking about how we containerize that information, how we do that, how we bring in data from the institutions, and then use AI to perhaps point our examiners in the right direction. I think that's going to be one that's going to be very, very helpful. But again, it's in its infancy, and we are very cautious about, quite frankly, the bank and the FinTech data that we're taking to make those judgments. And I think you would want us to be. The other thing I think a couple other regulators have talked about, I think the FDIC has raised this, and I like this, is to what extent can we go and have a kind of public-private partnership around, some people have called it certification. I don't use that word. But there's a lot of opportunities. There's a lot of product. There's a lot of things that bankers are trying to sort through. I think we are wondering how we might come to an arrangement where we say, and again, we're never going to give a safe harbor, and I don't think we're ever going to endorse a private sector solution, but some discussion around these ones seem to meet some of these causes. These ones seem to go. And at the Fed, we actually, this is kind of tangential, but when CECL came out, we actually have a little model that community banks can use to get started on their loan loss labs. It's not a safe harbor, but it's something they have. And I think that's an opportunity for us to try and put some more around this landscape. We have a Service Provider Act. We're thinking about that. But again, this is in its infancy, and we've really got to figure out how best to use the data you're giving us to point us in the right direction.
That's very helpful. And I think, kind of summarizing it, it seems like we're hitting on a few major themes that I know we've heard from our membership of. You got to have the right communication, you have to have the right tools, and you have to have kind of the right perspective coming into it, within this supervisory framework in order for it to actually be efficient and effective. Now, you touched on confidential supervisory information. I think it's important ultimately to be, yes, we want careful, cautious. We don't want AI tools deployed that are, not definitely kept in-house and made sure that they're, the data is not moving beyond. But going to that communication piece, we've advocated for kind of a relook at confidential supervisory information and who's in the room. And so I'm wondering, Bill, if you can talk about if there's any sort of opportunities, or you see any areas where the ability to change sort of the strict views of confidential supervisory information and who gets access to that and kind of who's allowed to be with the examiners, if you can touch on if there's any opportunities there for regulated entities.
So my first disclaimer is I'm not a lawyer, and lawyers make these decisions.
That's fair.
You know, we do have a capability, and we have in the past, and financial institutions can ask us who they can share confidential supervisory information with. I think I would prefer us to be in pilot mode around this and take each thing on a case-by-case basis. But what I would encourage banks to do is, if you do have a partner or someone you're coordinating with or someone you're anticipating with, and you think there would be elements of that would be helpful, and you've got to kind of make this judgment on your own, right? Because you're kind of opening the door for somebody seeing confidential information that, you know, you want to have a pretty strong relationship with them. But we do this with accounting firms. We do this sometimes with consultants. I think if a bank has a case and they want to test it, I would encourage them to reach out to the Reserve Bank and see where we can. I think we've got to find what our way is. And we clearly don't want to do that in a way where you're just trying to decide between 3 or 4 vendors. But it is something I think we can give some judgment around. And I think as technology evolves, as the landscape evolves, as the payment landscape evolves, we need to think about these things. But I think we will do it initially more on a case-by-case basis than with a blanket.
And that's helpful. And I know, you know, the examination time frame, that's just one opportunity, right? There's also pre-examination, post-examination. Really, you know, when your regulator's not at your doorstep, there's probably an opportunity to talk to them. And I know we try to focus on that and bring people around the table to do that. And so, Lisa, just going to your point about the communication aspect and thinking about that confidential supervisory information piece, I mean, where do you see the best sort of situation for best opportunities for regulated entities to come in? Should they be coming in, you know, pre-examination? Should they be, you know, how can they kind of engage so that way when thinking of the limited resources on the examiner side, making sure that they have the right people in the room during the examination, but also, you know, that the examiners are coming and not having to start from square one? How do you think that we can, you know, do that better in Delaware?
So I think it starts not during the exam, but well in advance of the exam. When the exam is, well, I was going to say when the exam is being scheduled, but I think it should start well in advance of that as well. I just think the constant communication. If as to Bill's point, if you're working with an outside firm and permission is needed to share CSI. We have communications with our financial institutions on a regular basis on things like that. We'll get requests, if you will, verbal requests, and then we'll ask for it to be in writing. Send that in through writing. And again, it'll run through our legal team, and then we will respond to that. And but that happens throughout the year. There's no specific timing on that. I don't know. During the exam, a conversation can definitely take place, but I think that's a little late in the game. I think it needs to be a constant communication with the office. The examiners are a great resource. If they have any questions, they can start there. If it's an institution that has not completed this process before, the examination staff is a great resource. Start there, then pick up the phone or send an email or a Teams call or whatever your method. Yes. Reach out and we'll gladly have those conversations and figure out what's the best approach.
Yeah, I know, you know, from just because we're involved in a number of different states and, you know, kind of across the country, and, you know, we've seen where when there's kind of a single point of contact, and then also when leadership is really leaning in, that those two things are very helpful for like industry to engage and to be able to say, okay, outside of this examination time frame, like let's just have a conversation about things like you know, maybe it's AI, something big, or maybe it's something specific like buy now, pay later, or things like that, where these are timely topics and people can really get engaged.
Just to add on to that, I would like to say that our examination staff, internally, we classify them as relationship managers. Mm-hmm. They're assigned to a certain institution, and off-site monitoring during an off-site monitoring, our examination staff or someone else within the office is reaching out to the institution. So, and finding out outside of the exam, outside of the scope, what's going on? What do we need to know? And that's a perfect time to do it as well, when the examiner reaches out during the off-site monitoring.
Absolutely. I'll make a shameless plug for any time you need us to come and chat with your staff. We're always happy to. So, you know, I like those sort of opportunities. So I think ultimately we've got a few more minutes left. There's, you know, I don't think any conversation would be complete without talking about digital assets a little bit. So if you all indulge me, I know we have Lisa, just staying with you for a moment on Senate Bill 19. You know, that's a strong approach to regulating stablecoins for sure at the state level. We haven't seen that kind of across the board in other states, so it's great that Delaware is kind of taking a first step in there. I know we heard about it from the senator, but how do you see this sort of space developing and the importance of having that regulatory certainty within Delaware?
So yes, Senate Bill 19, it's known as the Payment Stablecoin Act. It is very important, I think, because it gives the consumers, the industry, a sense of confidence in an institution that has to be regulated. These institutions have to reach out to our office and apply for an application or get an application, apply for a license. They're licensed by our office. They have to have certain requirements, BSA requirements, privacy requirements, capital requirements. I think that gives a sense of guarantee or surety to the industry that if it's a licensed institution, that it's something that you can trust. And I think it's very important, and we're at the forefront of it. We have a lot of work to do. Don't get me wrong. Thank you, Senator. But we're excited about it. We're looking forward to it, and stay tuned because there's a lot to come.
Absolutely. And Bill, from more of the regional and the federal perspective, how are you seeing this sort of develop and the importance of that regulatory certainty?
So I think we're beginning to get much better about not just talking about digital assets and having that span everything from crypto to tokenized deposits to stable coins to whatever the next thing is somebody thinks of. And I think that's important because I think, and I go to the consumers on this, they really need this level of certainty, right? For stablecoin, they need to know that's got a store of value. It's got a value that's going to be there. It's got a value that's not going to fluctuate. It's got a value that's strongly backed by appropriate measures, and they understand what it is. For crypto, that's a different world. To me, much more of a speculative investment and security. And I think as we begin to define these, either at the state or the federal level, to give people certainty, it will help bankers understand this is what I need for this use case. This is what I want for this use case. And more importantly, what are my customers really looking for? Are they really looking for just electronic cash, which is digitized deposit, tokenized deposit? And then what do I put in place in my institution and who do I partner with to deliver that for the customers? But I think it's clear that we've got to define on the spectrum of digital assets, what's the most secure, what's the least secure, and how do you monitor that?
That's super helpful. And I know we've got 2 minutes left, so I'm going to leave the last question is we've talked about a lot of things. What are things that you think industry, fellow regulators that we haven't discussed, what do you think they should be thinking about in order to have kind of the best sort of risk management, supervision programs moving forward?
So I tell my bankers one thing. Before you engage in this, understand, given your business model and what your customers want, what do they really need? Are you in a business where you need a lot of cross-border transactions, and so you want to be on the broader spectrum of the blockchain and the broader spectrum? Or do people just want to know that their cash is available to them and they can transfer it to a family member? It's understanding what needs you're serving, which is going to be critical for you to be successful with your FinTechs.
Awesome. Lisa, we'll give you the last word.
No, I agree. Know what your customers are. Know your customers, basically, your BSA. Yeah, know what they want, what they need, and don't hesitate to reach out to us as well. Keep us informed.
Awesome. Well, thank you all. Thank you for being experts and helping me, be a bigger fish in this pond because, standing up here next to y'all is fantastic. And thank you to the audience for paying attention and being engaged. So thanks all.